Hello viewers, welcome to my channel. I'm Hasham. So in this video, I'm continuing the discussion on funds flow analysis. Last video, I have explained you the meaning of the term funds flow statement. What is fund, what is flow, and what are the rules regarding current accounts and non-current accounts, how to prepare the funds flow statement. All these things I've explained in the last video. If you have not watched that, I suggest you to go to the playlist of my channel. Select the subject cost control and management accounting. Select the topic of funds flow analysis. Watch the first video. Without understanding the first video, you cannot continue this discussion. So be thorough regarding the meaning. Funds flow statement consists of two items. First statement is statement of source and application of funds. And second statement is statement of changes in working capital. So these two statements combined are called funds flow statements. The first statement is statement of source and application of funds. That I have already discussed in the last video. Now in this video I am explaining about the second statement. Statement of changes in working capital and funds from operations. These two topics I am going to discuss in detail. Before that, take a screenshot of the notes which I have written on the board so that while doing the problems, you already know what are the concepts, how to make this funds flow statement. Take a screenshot, then I'll explain. Come on. Now first of all, statement of changes in working capital. This is the second statement of the funds flow statements. Statement of changes in working capital. This statement follows the statement of source and application of funds. That means the first statement is statement of source and application of funds. Second statement is statement of changes in working capital. Now the primary purpose of statement is to explain the net change in working capital. Already last video I have explained you the meaning of fund is working capital. Working capital is the excess of current assets over current liabilities. Simply current assets minus current liability is equal to working capital. So the purpose of making this statement is to explain what are the changes in the working capital. Last year working capital how much? Current year working capital how much? So how much is the change in working capital? Change means the current year working capital may be increased or the current year working capital may be decreased compared to the last year. To find out the changes in working capital from last year to current year, we make this statement called statement of changes in working capital. So in this statement, all current assets and current liability are individually listed. So we are given the two balance sheets. In every balance sheet, you will find current assets and current liability for both the years. Already I have explained you the meaning of the term current assets and the meaning of the term current liability and examples of current asset and current liability in the last video. So individually you have to list down all the current assets and you have to list down all the current liabilities. Against each account, the figure pertaining to that account at the beginning of the year and end of the year is shown. That means, suppose the current asset is cash in hand. So for cash in hand, what is the figure at the last year and what is the figure at the current year? That means beginning of the year and end of the year. Similarly, cash at bank, what is the beginning figure, what is the ending figure? Next, sundry debtor, what is the beginning, end? What is the bills receivable, beginning, end? Closing stock, beginning, end. We take the corresponding figures of every item at the beginning and end. Similarly for current liabilities. Now, the net change in each account should be shown. Net change, that means last year cash was 10,000, current year cash is 15,000. So current year cash has increased by 5,000. So we have to write down 5,000 in one column. increase in current asset. Similarly, if there is decrease in current asset like stock, last year's stock was 1 lakh, current year's stock is 75,000. The beginning of the year 1 lakh stock, end of the year 75,000. So 25,000 rupees stock has decreased. So that decrease also we have to show. So 4 columns we require. The first 2 columns are beginning figures, ending figures, 2 columns. Next, increase values and decrease values individually. These 4 columns we require. The rules given below should be followed while making statement of changes in working capital. 4 rules you have to remember. The first rule is increase in current asset. If the current asset increases, it increases working capital. Remember, increase in current asset, increase in working capital. Decrease in current asset, decrease in working capital. So there is direct relationship between current asset and working capital. More current asset, more working capital. Less current asset, less working capital. Whereas current liability, inverse relationship, opposite relationship. Decrease in current liability, increase in working capital. Increase in current liability, decrease in working capital. So opposite relationship we have between current liability and working capital, and direct relationship we have in current asset and working capital. So increase in current asset, increase in working capital, decrease in current asset, decrease in working capital. Next, increase in current liability, decrease in working capital, and in decrease in current liability, increase in working capital. These rules you have to remember while preparing statement of changes in working capital. Now I am going to show the format, how this statement of changes in working capital will be shown. Here I have taken, first of all, statement of changes in working capital for the year ended. We will write down the year. 4 columns we require: beginning of the year, end of the year. In working capital increase, working capital decrease. 4 columns at the extreme right hand side. Now particulars. We take current assets. All the current assets will list down. Compare the 2 balance sheets. In the 2 balance sheets, on asset side you will find current assets. The current assets may be, I have given examples. Examples of current assets are cash in hand, cash at bank, bills receivable, sundry debtors, stock, short-term investment, prepaid expense, other current assets. These are the examples of current assets. So I have written down all the last year, beginning of the year values and end of the year values. These are given in the problem. Now we have to write down increase or decrease. We have to apply this rule. Last 4 rules. Increase in current asset, increase in working capital. Like see here, this cash in hand is a current asset. If there is increase, so put the amount in the increase column, working capital increase column. Right? So individually compare. If there is increase in current asset, that increase should be taken in the increase in working capital column. Increase column. Increase हुआ तो increase, decrease हुआ तो decrease. If there is increase in working capital, increase in current asset, put the amount in increase. If there is decrease in current asset, decrease in working capital, write the amounts here. Over. Now take the total A. A is the total of all current asset beginning of the year, all current asset at the end of the year. Now current liabilities. The examples of current liabilities are bills payable, sundry, creditors, outstanding expenses, bank overdraft, short-term loan taken, proposed dividend, provision for taxation, other current liabilities. These are few examples of current liability. Last year and current year values are given in the problem. Take the total. Now increase or decrease. Here we have to write down opposite. Rule is opposite. Here direct relationship. Increase in current asset, increase in working capital. Decrease in current asset, decrease in working capital. But in current liability it is opposite. If you find increase in current liability, put the amount in decrease column. Put the amount in decrease column. For example, bills payable. Bills payable last year it is 10,000. Current year it is 15,000. So if you compare the bills payable last year 10,000, current year 15,000, there is increase in current liability. Put the amount in decrease column 5,000. Opposite. Similarly, if there is decrease in current liability, put the amount in increase column. Put the amount in increase column. That's it. After taking all these increase and decrease, find out the working capital. Working capital is current asset minus current liability. Here you will have current asset as A and current liability as B. So A minus B, you will get working capital last year. Similarly, A minus B, you will get the working capital for the current year. Now compare it. Compare the working capital. Suppose the working capital last year is 50,000. Last year is 50,000 and current year working capital is 70,000. 70,000. Now compare it. Is it increased or decreased? It is increased. So there is increase in working capital. So below that, this you write on net increase in working capital. Now, how much is the net increase in working capital? 20,000. This 20,000 should be written in decrease column, because when it is increased, write down 20,000 here, and this 20,000 increase in working capital should be taken in decrease column. Should be taken in decrease column. Now you check the total of increase and total of decrease. It should tally. If you commit any mistake regarding this increase or decrease, then the total of increase and total of decrease will not be same. So it's a cross check whether you have done correctly or not. So I have taken the example. After finding out the working capital, compare it whether there is increase or decrease. Here we have increase. So increase amount should be taken in decrease column. If there is decrease, the amount should be taken in increase column. Then take the total of increase and total of decrease. It must be equal. That's it. This statement is called statement of changes in working capital. The purpose of making this statement is to find out the net increase or net decrease. Net increase or net decrease in working capital. So whatever answer you will get, net increase or decrease, this will be taken in the statement of source and application. In the last video, I have explained you about source and application. On source side, we take decrease in working capital. If you are getting decrease in working capital, that decrease in working capital will be taken in source side. If there is increase in working capital, this increase in working capital will be shown on the application side. That point you have to remember. That's it. Over. So I have explained you about source of application and statement of changes in working capital. Now some explanation we require for funds from operation. The difficult point in these problems, normally students will commit the mistake in funds from operation. And in examination, a theory question will also be asked regarding what do you mean by funds from operation. Now, before explaining the meaning of the term funds from operation, I'll give the explanation regarding the transactions. A business will conduct a number of transactions like purchasing the goods, selling the goods, paying a number of expenses like salaries, rent, telephone bill, electricity bill. So many expenses are there. So in all these activities, all these operations, there is inflow of cash and there is outflow of cash. Example, I am having a business. In my business, I am purchasing the goods and I am selling the goods. By selling the goods, I am receiving the cash. So this is cash inflow. At the same time, I am purchasing the goods, so there is cash outflow. And I am paying a number of expenses like salaries, I am paying rent, I am paying electricity bill, all these are outflows. So what I want to say, in business transactions, every transaction involves some inflow of cash and some outflow of cash. If inflow of cash is more, it is funds from operation. Suppose if the total inflow of cash during the year is 10 lakhs. So 10 lakhs is the total inflow of cash. And during the year, 8 lakh rupees is the outflow of cash, money going out. So during 1 year period, 10 lakh rupees inflow, 8 lakh rupees outflow. The net cash inflow is 2 lakh. This 2 lakh rupees is called funds from operation. So simple. If inflow is more than outflow, it is called funds from operation. If inflow is less than outflow, it is called cash lost in operations. Cash lost in operations. If we have cash from operation, funds flow from operation. If we have funds flow from operation, it will be taken on the source side. If there is funds lost in operation, it will be shown on the application side. Already in the last video I have explained. So how to find out these funds from operations? Understanding it's very easy. But how to precisely find out how much is the funds from operation? Funds from operation. Simply, we take only cash inflows, we take only cash outflows, ignoring those items which does not involve any cash. So actually, how we prepare the profit? How to find out the profit? By preparing profit and loss account. In profit and loss account, we take sales, we deduct all expenses, we'll get the profit. So simply we can say profit is funds from operation, but it is not right. It is not correct, because while calculating profit, we deduct all expenses, whether every expenses involves funds or not, whether cash is involved or not, irrespective, we take all expenses and deduct. So we got the profit. This profit is not funds from operation, because funds from operation involves only fund. Non-cash transactions should not be considered. Example of non-cash transaction is depreciation. One example, many examples are there, but the classic example is depreciation. Depreciation is only a book entry. It does not involve any cash, only adjustment entry is there. But depreciation is deducted while computing the profit. And for calculating funds from operation, depreciation should not be considered. It's a non-cash, like this. So here I have written funds from operation means the increase in funds on account of operations carried on. Increase in funds on account of operations carried on by the organization during a given period of time. A business enters into so many transactions. Every transaction will involve some inflow or some outflow of cash. Now, if inflow is greater than outflow, the difference is called source of funds. It is funds from operation. If the cash inflow is more than cash outflow, it is called funds from operation. It's a source. So if outflow is greater than inflow, the difference is application of funds. If outflow is more than inflow, it is called application of funds. It is funds lost in operations. Then funds from operation should not be confused with profit made during the year. You should not think that profit and funds from operation are one and the same. There is difference. There is difference between profit and funds from operation. Profit, while most of the expenses are outflow and funds, but there are certain expenses which do not lead to an outflow of funds. If you see the profit and loss account, in profit and loss account you will have salaries, rent, printing, postage, telephone bill, electricity bill. So many expenses are there. Most of the expenses are outflows, cash outflows, but there are some expenses which are debited to profit and loss account which are not cash outflows, which does not involve any cash outflow. Some examples are, items are there. Depreciation is a classic example. For example, depreciation. Depreciation is a book entry. Depreciation is only an adjustment entry. It does not involve any cash. Now similarly, there are certain other items which are non-cash and should be ignored while calculating funds from operation. Apart from depreciation, there are some other items also. So we have to ignore all these non-cash items to find out the funds from operation. That's it. This is the explanation regarding funds from operation. Now how to calculate funds from operation. There are two methods available. The first method is direct method. and second one is indirect method. Direct method says that we take all cash inflows, we take all cash outflows. So inflows minus outflows, we will get funds from operation. We will not consider the non-cash items. Depreciation or other items written off should not be considered. Only those expenses we consider which involve cash, which involve fund. So we will make a statement. In that statement, we take all cash inflows and only cash outflows. Then we get funds from operation. This method is a direct method. But normally direct method is not suggested because it's a duplication of work. Already we are preparing profit and loss account. Then separately we have to make a statement to find out the funds from operation by taking all the items. It will be duplication, time consuming. So the shortcut method is the indirect method. By using indirect method, we can easily calculate the funds from operation. What is this? In this, we will take the profit earned during the year as per profit and loss account. As per the profit and loss account, we take the profit. To this profit, we adjust for non-cash items, non-cash inflows and non-cash outflows. That means non-cash items debited to profit and loss account and non-cash items credited to profit and loss account. Those items we adjust. Example, in profit and loss account debit side, all expenses. In those profit and loss account, suppose 30 items are there. In those 30 items, 25 items are cash, whereas 5 items are non-cash. So we just take 5 items non-cash and add up. So how to find out the funds from operation according to this indirect method? This is the statement. Statement showing calculation of funds from operation. Closing balance of profit and loss account. In 2 balance sheets. Last year, beginning of the year balance sheet, we will have the balance profit and loss account balance, and end of the year the balance sheet is there, we will have profit and loss account balance. So end of the year P&L account balance, we will take closing balance of P&L account. To this we add items debited to profit and loss account not resulting in outflow of funds. Now we see the debit side of profit and loss account. I told you most of the items are cash outflow items, but few items are not outflow items. That is non-cash items. So those non-cash items we select. Example, 30 items are there. Out of 30, 25 are cash. 5 are non-cash. Those 5 cash items those 5 items we select and we add up. Example, depreciation, fictitious and intangible assets written off, appropriation of profit, loss on sale of fixed asset or investment, dividend paid or proposed, provision for taxation, any other item of similar nature. These are the examples of those items which are debited to profit and loss account but does not involve fund. We add up. Take the total of all these items, take it in the outer column, add up these 2 items. We'll get the total. Less items credited to profit and loss account not resulting in inflow of funds. There are some items on the credit side of profit and loss account but does not involve any inflow of funds. It's only a book entry. So those book entry, adjustment entry items are very few. Example, profit on sale of fixed asset or investment, appreciation in the value of fixed asset or investment, dividend received, any other item of similar nature. Only few items you will find on the credit side of profit and loss account which does not involve fund. So take the total of these 4 items, take it in the outer column, deduct. This one minus this one, you will get this amount. Less opening balance of profit and loss account. Beginning of the year, what is the balance in profit and loss account? That will take, deduct. The resulting figure is called funds from operations. After listening this lecture, we can easily understand while doing the problem. So you will get the perfection only practically when we implement all these points in doing the problems. Apart from this funds from operation, 2 more adjustments are there regarding provision for taxation and proposed dividend. There are different treatment how to deal with provision for taxation and how to deal with proposed dividend. I'll explain you these 2 points while doing the practical problems. So till now, I have explained you in these 2 videos the meaning of the term funds flow statement, how the funds flow statement will be prepared by preparing statement of source and application and by preparing statement of changes in working capital. Then about funds from operation. Remaining small points I'll discuss while doing practical problems. Inshallah, we'll do the problems in the next video. So if you're satisfied with my lecture, give a like to the video. Share my channel among your groups, among your friend circles, so that more students can watch the video and enhance the knowledge. Give your comments, messages, so that I can be able to know whether you are benefiting from this channel or not. And do subscribe my channel. Apart from this, I have already made one more channel, channel number 2. That is Hans Accounting Institute. If you go to search of this YouTube, you just type Hans Accounting Institute, my videos will appear. So subscribe that channel also. That channel I have made for IGCSE students. But it is equally important to anybody who wants to enhance the knowledge of accounting. So do subscribe my second channel also. Inshallah, we'll continue our problems on funds flow statement in the next video.